What's good, Kanekis? Welcome back to the channel. I hope you're all doing well. It's not looking good, guys. It is not looking good. It's been a year since I started talking about gold on the channel, and the price over the past year has absolutely shocked me. I didn't expect it to go this high this fast. So what we're looking at currently is TradingView. This is the price of gold in dollars. I have adjusted it to be exactly a year to the date. So I believe the exact date was 23rd September when I talked about not saving in currencies and why long term you should be saving in gold. The price of gold is now $3,868 per ounce. In percentage terms, it is up 45.64%. In the same time, the stock market since a year ago is up 16%. So the stock market in real terms has lost. Silver, how has silver done? Silver is the other one that I was talking about. And that time silver has done 47%. So it's performed even better than gold. Remember the video where I talked about how silver will outshine gold? It's still early. It hasn't started yet. But I think my timeline for that one was by 2037 where it starts. This is just the beginning. Silver is nowhere near its fundamental value. Obviously, these are percentages for the US dollar. In the pound sterling terms, gold is up about 42%. Silver is up 47%. Obviously, the miners are up even higher. But really, this video is about me explaining why I am worried. When gold goes up, it's not something to be celebrated. I don't think seeing the price of gold increase is actually what it is. It's the dollar losing value. Its currency is losing value. And the thing about it is what we've seen over the past year with regards to government policy. So in the UK, we have seen the implementation of the Online Safety Act. Very recently, they've just talked about creating a digital ID in the UK, the Brit card. The US has implemented several tariffs. Even recently, Trump is now doing a war on upholstered furniture. He's put I think is it 50% tariffs on furniture imported from China or anyway, I think it's just 50% imported import tax on furniture. They call it tariffs, but tariffs are taxes. We've seen Charlie Kirk assassinated. We've seen, which is honestly terrible. Yo, free speech, man. Free speech. You shouldn't be killing people for what they say. What else has happened? Ukraine has furthered their attacks on Russia. They have started bombing oil refineries in Russia. We've seen the Middle East war spread out, I think, as far as to Qatar now. There were some attacks in Qatar. What else has happened? Honestly, I've lost track. I've honestly lost track. Just too many things to do with government overreach, totalitarianism. Another thing in the UK, there was the far, or they call it far right movement, but I think it's just people more or less fed up with the illegal immigration. All of this has happened within the space of a year, and all that time, gold's price has increased. In the precious metal space, they ask, what does gold know? Naturally, gold doesn't know anything. It's just a metal, but it's about what do the people who are buying gold know. So what do we know? We know that governments are cooked. We know they can't afford the debt. We know they can't afford the spending. So they're going to have to print currency. When they print it, it's going to devalue the currency that the public is holding. Everyone is going to be worse off for it. Those people who aren't holding gold or silver. Listen, guys, if you don't have an ounce by now, even a tenth of an ounce, do your best to get it. Don't think your house is going to, or just because you've bought a home, you're fine. Because the thing about that is mortgage rates are unlikely to come down. If they do, it's going to be very slight because mortgage rates are tied to bond yields. So I'll just go on a tangent at this point. We'll look at the 30-year for the UK. And this is how it's looking. So it's currently at 5.5% for the 30-year. This obviously affects mortgage rates. So for about 40 years old, it has been coming down, and then it bottomed. So this is the bond yield. The bond yields bottomed during the pandemic in 2020, and they've been going up ever since. Now, you see this massive gap here? Gaps get filled. gaps get filled. So we're looking in the near term or in the future at like 7.4% on the 30-year. This is going to send mortgage rates up. Your monthly payments on mortgages are likely going to be increasing. If you are saving in currency in order to pay that down, is going to be very difficult. So I would recommend buying some gold just to make sure that when it goes up, gold goes up with it. You'll be able to pay your mortgage and you'll still be able to keep your home. Not financial advice, of course. This is just what I would do if I had a mortgage right now. And another thing, the reason it's going up is because in the East, China, Russia, India, they've stopped buying treasuries. They've stopped buying treasuries of the West. They've stopped buying US treasuries. They've stopped buying UK gilts. They've stopped buying European bonds. And they're opting for gold instead. Morgan Stanley, very recently, the CIO, Chief Investment Officer, just recommended a 60-20-20 portfolio. So 60% stocks, 20% bonds, 20% gold. Usually they go 60-40. So 60% stocks, 40% bonds. They have halved the percentage to bonds, saying that gold is the inflation hedge. Now, this is something we already knew. Gold is where you want to be. That is really where you want to be. Honestly, I think 20% gold is a bit too low. You probably want to be 60% gold, to be honest. I mean, you saw earlier, gold is outperforming. It's completely outperforming stocks. And then this is the last bit I'll show. So I did a bit of fundamental analysis back in June, where I asked Google Gemini to perform this calculation. So this is based on something I had read from Murray Rothbard's book, What Has Government Done to Our Money? And I asked it, I basically told it to do this. Find the total amount of gold mined in 2024, calculate the increase in US M2 money supply between 2023 and 2024, and then divide these two numbers. So the M2 money supply increase divided by the number of gold ounces mined in 2024. And the value is $6,286.74. Now, this is the near-term target. What this number basically means is the price of gold would need to be $6,286 to cover all the currency printed by the US Fed. This is just the US Fed. For that 1 year, 2023 to 2024, the value of gold will need to be over $6,000. What about silver? I performed the same calculation for silver, $902. Silver is currently at $46, $47. So we're heading much higher. What this means is governments are going to lose grip on the currency. The currencies are going to go even further down. Unfortunately, this likely means they're going to get even more totalitarian, implementing some absolutely atrocious policies, some that will mean reduced liberties, reduced freedoms, unfortunately. So the long and short of this is buy gold, buy silver, look for alternatives to the West, places you might consider moving to in case push comes to shove and you need another place to live. I'm currently thinking about leaving the UK in like 2 to 3 years, so I've already had it in mind that this is not a long-term place to be honest. Just start thinking of alternatives. I hope you guys enjoyed this video. If you did, please hit the like button, subscribe as well if you're new and you haven't already. I'll be back with some more analysis in the future, and I'll see you in the next one. Peace.